everybody. Thank you so much for joining us. We are live here on the expo floor at ITC in Mandalay Bay. My name is Ema Roloff, and I'm the co-founder of Roloff Consulting. And I've got Jeremy here with me today, and we're going to be talking about combined ratio and kind of the market as a whole. But before we get to all the questions that I've got for you, can you give everybody an introduction?
Yeah, so thanks for hosting me.
Yeah.
My name is Jeremy Jawish. I'm one of the founders and the CEO of Shift Technology. So what Shift does, it provides insurance company a software service platform with AI algorithm that helps them take better, faster, more accurate decisions through the whole life cycle of a policy and claim. So we help them to, take the journey from, A until the end of the life cycle and automate all of this in real time.
So as I just teased, I want to talk a little bit about kind of the state of the market and what you're hearing from your customers. So I guess what generalization have you heard coming from the carrier partners you work with?
So it's been several months that we are here in obsession about optimizing the combined ratio because we have what we're calling a combined ratio crisis, especially in the United States, because there are three major reasons why we're facing this, really drastic change in combined ratio in the last year. I would put them in three categories. The first one is because of inflation, which everybody's been talking about. So inflation had increased in rates that we've not seen in a long time, and which increased a lot the cost of the claims. The second reason is more environmental. We've seen a big increase in natural catastrophe and a lot of natural catastrophe events also hit a lot the claim loss. And the last reason is more around regulation. So regulators are being more aggressive on the rate increase, not allowing a big part of carriers to catch up with inflation and natural catastrophe increase, which today leads to businesses that are really struggling with the combined ratio numbers that are, I think, might be at some point hurting the industry.
So we're at ITC. We're amongst thousands of people talking all about technology and automating processes. So the easy answer would be like, let's automate our processes to kind of start moving past some of these challenges. But can you talk a little bit about why just simply automating a process might not be enough to get us over that hump of the perfect storm that we've created, so to speak?
Yeah, that's something we've been repeating to our customers and also showing them that automation is important, especially for customer services, because customers expect today a service that is in real time and available, and you don't need to spend time on a phone with someone to have things be moved forward. However, there's so much you can automate, and so this reaction about we're losing so much money, so we should simplify, automate, and optimize our staff has its limits. And what we're advocating for is instead of just automating to automate, there's a lot of levers that they're not, carriers are sometimes not investing enough in, which is changing the way they take some decisions that would help them to impact the combined ratios. Taking the better decision through the underwriting or claim life cycle can have a big impact. So if you end up automating your suspicion decision, is a claim suspicious, you can go and grab 1, 2, 3% of your claim loss that you end up not paying because you're automating that and optimizing the way you take decisions there. Detecting subrogation opportunities you were missing is also a way to improve by 1 or 2 or 3% your claim loss. Also, taking the better decision at liability is something that could really impact combined ratio. So there's so much you can do by optimizing and trying to remove some of the staff or the process you have. But at some point, there are structural things and decisions you can really change the way you look at these decisions on a claim life cycle that can really have enormous impact on combined ratio. And artificial intelligence today gives us these tools. And I think because it's not the new trendy thing that we don't know how it's going to work, it's really actually working in real life. I think this is something that carriers should really go all in on today.
So traditionally, obviously you mentioned fraud detection and that type of thing. We usually think of that in kind of the claim scenario and kind of picking out where there might be fraudulent behavior when a claim has been filed. Can you talk a little bit more about that idea of moving that up earlier into the process and how that can help with the combined ratio?
Yeah, so when you see that some of the risk you're taking at the underwriting level sub part of your policies end up having a 500, 600, 700% combined ratio because it's risky you should have not underwrite. This is where our customers are realizing if you not just say, you know what, I'll deal with it when the claims happen, and you end up having a better way to assess, do you want to take this risk, do you want to underwrite this policy, or once you took the policy, in the discovery period after 20 days, you're like, oh, you know what, I don't want to take this risk. So it's having a huge impact because sometimes it's too late. You underwrite a group of policies and you realize, oh, wait a minute, it's having 600 combined ratio, what should I do with it? Or sometimes you even don't realize it because you have a mass of policies that are within your mass portfolio. So customers are really now, carriers are really now realizing that it has a material impact, and that with all the technology we have today, it's not anymore wishful thinking about how to go about it. There's an actual, product that can help there. And the ones that are going ahead, before others are seeing, an advantage that is now being a real competitive advantage there. And this is where I think the mindset of, let's underwrite as much as we can and we'll see later. With the sensitivity we're having combined ratios right now, there's some kind of a new, aha moment where like, oh, we should now really look at it even at the underwriting level.
So then when we take a look at, obviously we just kind of looked at how fraud can come in on the front end and how we can predict that earlier and make better decisions earlier in our process. But if we continue kind of looking at that life cycle, we've got the claims piece, but then there's also kind of subrogation on the back end. So when you guys talk to carriers about improving that combined ratio, how does subrogation fit into that and like that overall savings that you guys could potentially help with?
Yeah, so at any moment where you automate your decisions and you automate it in a way where you don't embed enough AI to take the right decision, you end up missing like subrogation opportunities where you should have not paid the claim. Or sometimes even handlers, when the more you reduce your staff, the more they're going to be overwhelmed with how many claims they need to look at, or how many information they need to look at. And this is where the only way you're going to be able to automate it in an efficient way is to give these handlers, or even being able to have algorithm that would help you say, oh, wait a minute, you should not pay this claim because there's a subrogation opportunity for this and this reason. And I think one of the breakthroughs we're having lately with generative AI is being able to explain very quickly why there's a subrogation opportunity, why a claim is suspicious, why they should review the decision, or even before taking a decision, why they should take this decision. The new way we're able to give in a granular way and in a meaningful way why they should take decision is really increasingly having an impact on the combined ratio, where you're able to very quickly say, oh, wait a minute, I should not pay this claim. There's a subrogation opportunity. I should go through the process, or should not pay this claim. So it's really suspicious. I should investigate it. And so, from our side, there's at every decision there's a product that can really help them take the right decision. So fraud detection is one. Subrogation is another one. Approving loss adjustment report or codes or invoices is also one, where you're able to compare what you received to what was covered or what the circumstances are. And so the way we're going about it is once a carrier work with us on a product, we're able to leverage the fact that we deploy the platform on the processes to say, oh, now you can put on the subrogation detection product, or now you can put on quote or loss adjustment report approval, or you can put on liability assessment product. And in some cases, we're able to go from 0.51% of claim loss being not paid to sometimes 6% when you combine all this product. 6% is a big number on claim loss. And this have been very successful in this environment, and I think it's helping carriers to realize that you should go after efficiency, but there's much bigger dollars you can go and get by taking better decisions.
So I've decided now, after my first interview, that I'm going to end all of my interviews with this question, so now you're getting it as well. But if you had to pull out your crystal ball and kind of look at like what your prediction, especially as we start talking about things like generative AI and that kind of thing, what is in your predictions for what the insurance industry will look like in the next couple of years?
Next couple of years, I think insurers, some will solve this combined ratio problem and get out of it very, very strong and go back on taking more market shares. Some of them will be absorbed. I thing. We've seen it in the past in other geographies. So Shift works in 30 different countries. In some of them we cover more than 60-70% market share. And we've seen cases where you can't get over it, you end up getting absorbed. And I think the exciting part, and I know it sounds like a little bit very common, but the ones that are gonna be the first one adopting technology are the ones that are gonna be winners there. And I think we're gonna see two categories: the one that embrace technology and absorbing it, the one that not and gonna get absorbed and get technology through these acquisitions. And I think this is gonna be a healthy outcome for the market, because at the end, I think consumers will benefit from that and be able to have the right rates and the right policies that they need.
Well, thank you so much for joining me for the conversation, and have a wonderful rest of the conference, and thank you everybody for joining us.